We're live again for another week, another episode. And a lot has happened, specifically around interest rates rising, inflation numbers have come out, and it's not been good. Or I guess if you look at it in the right lens, it's been great. It's a signal that, well, we've known for the last 2-3 months I've talked about on my weekly streams that a recession is coming. That's a fact. Inflation is at the highest it's been in over 30 years. We never thought we'd see late 80s, early 80s type of, early 90s type of CPI inflation. Now they've adjusted all of those metrics so that things don't seem as bad as they are. As an example, housing here in Canada, well, specifically here in Ontario, is up like 40% on the year. And the housing CPI index, people spend about half of their income on housing. So it's not at all reflective of the actual changes in housing. But anyway, forget getting into how they calculate and how they change the calculation to weight it towards things that don't matter, like how often do you buy a 70-inch TV? By the way, TVs have gotten a lot cheaper relative to their performance and size. So by CPI standards, technological advancement has made electronics a lot cheaper per what you get. But you need more to have the same effect anyway. Like a phone from 10 years ago is garbage, but they would say, hey, you're getting more RAM per dollar. Like it's actually more efficient. Anyway, I won't get into why the CPI stuff sucks, but basically CPI sucks. It's not a great indicator of measuring the change in price, but it's one indicator we can look at and we can adjust that number. But yes, inflation is officially just under 10%, probably adjusted to 15% right now, which is pretty wild. They're calling it 8.5%, but like, in real life, food prices are up, housing, 3/4 of what you spend your daily budget on or your monthly budget on is up 25%. So we're feeling it, and maybe it's transitory to an extent. They're arguing that supply chain issues have driven prices up artificially high, higher than they will, and that there'll be a correction. They're arguing that the war, Putin, Russia, all that stuff is driving the economy to levels where the cost of fuel is double now, right? So transportation costs will increase, therefore food costs will increase, materials will increase, which should lead to real estate prices rising. However, the government is tightening at the same time. There's a quantitative tightening going on. They're not printing as much money. And we know that if you track the money supply against the S&P 500, they're almost exactly correlated. Over the last 50 years, whenever the government prints money, the S&P 500 rockets up. Hence the last 3-4 years, 5 years we've had. But now they're tightening, so they're not printing as much. And they're raising interest rates, which leads people to be in a situation where they don't want to be investing, right? And when interest rates are rising, I'll give you an example. So let's say you're a large hedge fund or something, and you have $100 million in funds to deploy. In December or January of this year, we're talking 1 quarter ago, 3-4 months ago, you'd be in a position where you're like, okay, I can invest in treasury bills and make 1%, savings account or whatever, make like nothing. Inflation was still on the rise. You'd look at the stock market, it's at all-time highs. You look at all the different vehicles you could put your money in, you're like, geez, everything's at all-time highs. Then they looked at real estate and they're like, well, real estate always goes up. It's stable, you can get cash flow. We don't care about the prices if it goes down. Let's park a whole bunch of money here. And they drove large cap markets like Toronto, Vancouver, New York, LA, Miami, drove those areas to 3 and 4 cap rates. Some stuff was selling in the 2 cap rate. A 2 cap rate means that if you buy the property in cash, net of your expenses, not including your mortgage or any financing costs at all, if you bought it 100% in cash, you would look for a 2% net return. 2% net return. They were happy with that. Like people are buying up real estate like, oh my God, I'm gonna make 2% a year. Yes! Like that's horrible. I don't even understand it. Here in London, Ontario, we have 40, 50 unit buildings selling for a 3 cap rate in decent areas. 3. That means you buy it in cash, you're looking at making 3% return. Here's where it's bad. If you go and borrow a mortgage, commercial mortgages right now, in the US floating at 5 and 6% now, in Canada creeping up towards 5%. But if you're borrowing at 5% and your assets returning 3%, every dollar that you borrow in a mortgage costs you 2%. The whole thing that I talk about in this channel about why real estate is so sexy is because you can use leverage to own real estate and increase your cash flow and increase your overall appreciation and market upside as you improve the property. That's done in this new environment. Real estate isn't as attractive as it once was. I've been selling my properties off. I have 5 rental properties left. I'm disposing of everything. Gone. I'm going to sell all my properties. It's already down. The market's already flat. Mississauga, just outside of Toronto, Brampton, you look at those markets, they're down 5 to 15% in 2 months. Right now, average sale price down. I'm a realtor, I can look at all the data. In London, Ontario, again, flat, but it's slightly down, but flat for the most part. It will get bad. Once people have realized, and right now, I think the saving grace for the market is that people have rate holds locked in at 2%. They're like, geez, I have a mortgage locked in at 2%. And by the way, if you do or can get a mortgage locked in right now at 2.59 5-year fixed, go and do that. Lock that in right now. There are deals on ratespy.com. You can lock them in. I make no referral fee. Just go to the website, check it out. They spy on all the banks for you. They spy on all the lenders. You can literally see who has the best promotions. Some people have been paid to be on there, but you can see everyone that's on there. It's way better than Rate Hub. Rate Spy is more transparent and takes less bribes for who they post. It's a lot more transparent. You can lock in your rates there. Real estate makes sense to buy now in the sense that you can negotiate great discounts. If you can find properties at 90 cents on the dollar, 80 cents on the dollar, and you can do that now where you couldn't before. I have agents calling me. I have friends who have agents calling them saying, hey, this property's, we had an offer date. We priced it below market. And then 2 months ago, it would have sold 100,000 over asking. No offers came in. It's like, whoa, you priced it below market and no offers came in? Yeah, it's dead. No one knows what's going on. I'm hearing a lot of that chatter in the real estate market. That means in 6 months' time, once the common folks start hearing about it, once people start reporting on it, we're going to have all that FOMO, all that speculator energy and capital gone. And they're banning foreign investment into residential properties. And they're increasing supply. They're going to start building a ton. They're going to start supporting all of that. While they raise interest rates, and as interest rates rise, that will put negative pressure on real estate, which real estate has needed for some time. The prices to rent ratios, the prices to affordability and income levels are way out of whack. The average person can't afford to own a home in Canada right now. And it's not much better in places like Miami, Florida, where rents are up 40% almost on the year, where real estate's up a 35% annualized changeover. To me, that's unsustainable. And what I think we'll likely see is a a short-term period of decline. What's going to happen is people who have average days on market will increase over time. So the days you have your property on market used to be like 5-10 days your property be sold. Now we're going to see 30, 60, 90 days property going to sit. And the sellers who are desperate in those times will take lowball offers. Lowball offers weren't a thing because every property just sold like lickety split like that to multiple offers. You didn't have a chance to negotiate. Now you have a chance to negotiate. Now you can pick the gems. And that's where you make real money. That's where you make real lift on your capital. So you can get those quote unquote wedge deals. So it's very, very great that this is happening. Rising interest rates should, and the quantitative tightening and the rising of interest rates should in the short term actually be bullish for the stock market. So I'm still in, I'm holding cash, I'm less margin than I was say 3-4 months ago, but I'm still in the market a little bit. I'm going to slowly get into a cash position. I'm going to take safe trades where I'm ensuring, the S&P 500 at a 20% drop. I'm not going to buy in the market because I believe it could dip. We could have some turbulent times in the next 6 months. I don't feel that. And by the way, I am 100% certain in the next 24 to 36 months, we will have an economic stock market collapse. And when I say collapse, I mean at least, we'll call it collapse is a bit dramatic. At least a 15% pullback and then followed by a year of no growth. So I think the current price, the S&P 500, we will see 2 years from now, which is like, wow, to make nothing in 2 years, that's bad, I would say. Long-term, 10 years from now, yeah, it'll be a lot higher than it is now, sure. Like, that's a given. As they continue to print money, the fiat will inevitably do that. It will continue to deflate in value and inflate your assets. And they will tax a portion of that, and that's literally how the system is designed to operate. But yeah, there will be opportunities. I'm going to take this opportunity, and I'm sitting on bags of cash right now. So, like, I'm ready to go. I could take down a $10 million building like that. I'm ready. I have a great track record as an investor who's done a lot of this. I've been in the trenches for over a decade now, and I'm looking to sell most of my Canadian stuff off Not because I necessarily believe the Canadian real estate market will crash, though I think there will be a pullback. We will likely see a 15 to 20% pullback in the prices off of February's highs. Now that sounds drastic, like a 20% drop. That's happening already. We've seen a 10 in some markets like Oshawa, we're down 20% already. Markets outside of Toronto in Ontario have dropped 20% already on average from the highs of February. That's in 2 months, 10% a month drops. So people say real estate's super safe, super consistent. That's bullshit. Like if you look at the actual data, there have been ups and downs. It's a reality. We don't buy real estate to speculate though, right? Those people who are doing that, they're on a different channel. They're not on the Mike Rosehart channel. We're not land developers who are speculating on price. We're not buying condos and then hoping in 3 years are going to go up in value with negative cash flow. That's not us. We're buying properties that are cash flow positive. So we can afford to hold, and over the long term, real estate does go up. So it's going to be okay. This is the time you get in. This is the time to buy. I'm not trying to time the market when I'm saying I'm selling my real estate portfolio off. I'm looking in the next 2 to 3 years to leave Canada, to file an exit return and set up residency somewhere like the Bahamas, where I can file no tax return. The ability to personally not have to file a tax return, to have, say, crypto holdings or capital gains and pay no tax, nothing, don't even declare it, not even have a tax time, that is very, very attractive. I just personally think that we're in for a rough 24 months. And I would rather have bags of cash. I could always re-engage. I know when I sell any of my assets, I sell them at a fairly good price. I can negotiate a better price on something that I can find in the market, off market, or wherever that I can find, then I can sell my property for. So even when I sell a property, I can always get back into the market at a discount. In the stock market, you can't really do that. But in the real estate world, in the business world, you could sell your property at, say, a 6 cap rate and find something else at a 10 and get in, right? If you're me, like my God-given gifts are analysis and negotiation and deal find. Like I get a high. I naturally enjoy finding deals. It's why I was drawn to frugality. Like if I go in and buy $400 in groceries for $150, I just makes my day. If I can go find something on sale for like drywall's half price, if I can negotiate with a contractor and get them down to like half the price, I just enjoy that. Like I enjoy that back and forth that most people don't like. That assertiveness that I sort of was and trained in me, most people don't have that. I live for hunting for deals. That's my thing. And so I'm going to enjoy this recession more than ever before because this skill set of finding deals, it was hard in real estate in the last 24 months. Very, very hard for me to find good opportunities. That's not going to be the case. Foreigners buying in Miami, buying in Naples. I have friends who are buying properties right now messaging me saying, hey, we're looking at 7 to 8% interest rate as a Canadian buying a property in Florida. Foreigners investing now are looking at 7 and 8% fixed rates. It's insane. The interest rates are so high right now. Some of the series of treasury bills, now they're capped for small, not for institutions, but for small people up to $5,000 to $8,000, are paying 9.25% interest on government bonds. Are paying 9% right now. That's how badly they're trying to attract capital and can't. It's one. That's a red flag. I'm also, as a side tangent, extremely bearish on fiat in general. I don't have great, especially in 2020, and I saw how much money they're printing. I saw how poor the management practices were of many of these countries. A lot of these developed, top 20 nations like Canada and the United States and several in Europe and Australia are under bad management, in my opinion. They're great companies. Like, if you look at the country like a company, Canada has amazing natural resources. It's the second largest country in the world. I feel the same about Russia, by the way. I'm actually invested in the Russian market. I actually got in just before the indexes closed. I'm like, geez, this is an opportunity here. They're shutting down the indexes and the whole world was poo-pooing on Russia. But Russia's the largest country in the world. They also have a huge population. They have a huge amount of ability to produce as an economy. And all those natural resources like oil, as an example, and many others, precious metals. And strategically, they're positioned pretty well, pretty close to Europe. So they do have a lot of advantages going for them. To say, there's people pricing in that the Russian, some of these ETFs that track the Russian market, they had puts selling at $1 and $2. Like, what? You think the market's gonna go to zero? No, Russia's under bad management. Putin's not a great leader. But the country itself, it's huge. It's the largest in the world. And it has a lot of people and a lot of wealth. And there is a lot of opportunity there, right? They're relatively educated population overall too. a number of things going for it that make it a great place to invest. Yeah, there are definitely ways you can still, like traders can go in and invest still. I think the actual market's open right now, but on the U.S. exchanges, it's frozen. I got in before it froze. So I have options that technically, if the market stays frozen, I get paid on those options, and I don't get assigned unless the person actually has the shares because they can't go out and buy them to assign me. On one of a couple of my contracts, I actually got assigned because the person that I guess I sold my puts to actually had the shares to give me, even though the markets were closed. They were able to assign some shares to me, so I actually have some shares, and I'm bullish. Like 5-10 years from now, I'm not going to look at it, but like 5-10 years from now, I'm sure this will all blow over or whatever. There'll be a common ground there, and I think we're trading at a pretty big discount. There's wealth there. There's a ton of gold and oil, and the people have value. Like people bring value to an economy. That's why the U.S. economy is so powerful. That's why the Chinese economy is so powerful. 1 billion people. Like they're just. I mean, China's bigger than Russia. Again, China and Russia are allies here. And by the way, the U.S. is not in 10, 15 years. The U.S. is not going to be the most powerful country in the world or the richest. It's going to be China, followed by India. And guess who's the partner of China? Russia. Again, I'm still bullish on Russia. I know it's like blood money and whatever, and like anyway, it's terrible what's happening in Ukraine, and there's lots of sides to the story, and I try to watch both sides, and I see propaganda on both sides, and I think the U.S. has more involvement than they'd like to admit. I think if Trump was still in charge, there probably wouldn't be an invasion at all right now, but that's neither here nor there. They probably have stoked the fire. NATO's definitely somewhat accountable, but Putin is horrible. He's an evil person who's doing a ton of bad. I don't condone that at all. But there are a lot of good people in Russia too. I have friends who are Russians who are like, we don't like Putin either. We're just afraid to speak out. And so there's a lot of those strong entrepreneurs in that market who are delivering value, who are still there. And management will eventually change. Like Putin's not going to live forever. He must be almost 70 now, I think. Yeah, he's like, what, 10 years younger than Trump, maybe? Yeah, so like, he's like 70-ish. So like, what, he's got like 10 years left, maybe, max? I'm in it for the long haul, and Russia's, it's going to be fine in the long term. So anyway, smart people that will persevere and carry through these struggles. And so anyway, the real estate market. I will go through some questions here actually first. I'm on a journey, by the way, guys. I don't know if you guys are aware, but I made a commitment to myself that I'm 29 years old right now, which is like, geez, I can't believe how old I'm getting. I'm not a kid anymore. 29 is like hardly a kid. I'm almost 30. Jeez. Yeah, this is my last year to make something happen. I had a goal that I would hit 100 million by 32. And so I'm still on that goal, but I've made a 5-year plan where I want to get to 100 million net worth, which would be about, depending on how much leverage I use, 300 million in assets. I've got a long way to go. And then by 40, my goal is to get to 1 billion. So I'd like to be 40 and have 1 billion of assets. Now that net probably is 100, 200, 300, 400 million, something in that range, depending on how much leverage you apply to the business. The more leverage, the better. The more cheap debt, the better. Now we're going into another cycle where there's going to be high interest rates. So debt isn't as attractive unless you have really quality cash flowing assets. But for those watching, I'm just going to give a call to action. If you're watching this right now, and I can't necessarily solicit capital, but if we're friends on Facebook already and you're an accredited investor, let's chat about how we could work together to build something. I think there's going to be huge opportunity in the next, and I'm acutely tuned in to a few markets in Florida, Texas, and a few other red states where it's very landlord friendly, where you can say to the tenant, hey, your rent's doubling in 6 months, pay it or leave. And that's legal. Like, hey, your rent's 2,000, now it's 4,000. Get out or pay it. Where like places where you can actually run a real business in real estate. Here in Canada, it's communism, and you can't raise your rents. And anyway, I would never run a long-term landlording type scenario property here in Ontario anymore. There's no interest in that. Airbnb, okay, at least you have some control. You have a credit card to bill for damages. It's somewhat more favorable, but 30-day stays plus equal tenancy anyway in Ontario. So anyway, commercial can make some sense. I think long term, I'm not going to have that. I will still have some assets in Canada, but the majority of my assets are going to be internationally in countries where it's more favorable. I will likely still have some commercial real estate in a corp here in Canada, but I plan not to file any tax residency here. So I'll have no personal primary residence. I'll cut ties all my personal assets, so I don't have to pay tax in Canada. I'll still be a Canadian citizen, still have a Canadian passport. I can always come back to Canada if things ever change and it was under better management. But anyway, my ask to you, if you're watching this and you have like 500,000 or $1 million that you want to deploy, you're like, geez, the stock market's crashing with interest rates at inflation at all-time highs. It's putting negative pressure on, it will put negative pressure on dividend stocks, because why would you buy dividend stocks that pay 6% yield when you can go get T-bills or other bonds at 9%, right? Or 8% or 7% or whatever it ends up floating at, or you can give mortgages at 7%. Why is anyone going to buy dividend stocks? So dividend stocks won't do well. A lot of the stocks out there, I think, will not do well over long term. So there's that. Certain pockets of real estate will be flat for a long time. Good operators and people I'll be partnering with to run, I already have 2 partners in mind that will be running operations. I'll just be focused on what I do, what I love, which is acquisitions. That's what I like to do. I like to buy businesses, analyze them. I like to buy, and by the way, like 100-unit buildings are just businesses. Like at that point, you're literally buying businesses in real estate. And you're applying systems to them. You're making those businesses more efficient. You're improving those businesses, and you're adding value to them. And that's how you get the lift. You buy smart at the beginning. Like that's all real estate is at any level. But at scale, it's just doing bigger deals. I see you guys in the comments there. I do have some Ultra that I'm holding as well. So I'm UOS. I'm a fan of. Jonas is a diehard fan on that. So 100%. I think that's a great gaming token that should appreciate a fair bit relative to its competitors the next couple of years. GameStop, Chung, I don't know, man. I won't go as far as to short GameStop because I got in front of that train with Newegg and it blew me away. I lost $1 million, right, doing that. So I don't short, period. But no, I'm not bullish on the fundamentals. Don't make sense. Maybe it will just fly to the moon. There are a bunch of crypto projects I don't believe in either, and NFT projects that I don't believe in that also do 100x or whatever. But again, that's gambling. Maybe it's educated gambling, like you're able to sort of count cards in the sense, and you're able to get some insider information and make, tons of money. If you have that edge, awesome. Like, explore that. I'm not betting the whole farm on Ultra or GameStop, but Ultra, I as a gamer at heart, I think there's huge value in that as we move towards the metaverse. Again, I like Intel as a company long term. I like Facebook at Facebook's basically a value play at this point. It's like a 13, 14, 15 PE ratio. They're just printing cash, and they are inflation adjusted. They will do well even if interest rates rise. They don't have that much debt relative to the cash flow they're bringing in. Just another solid company that's poised well to do well, I think, over the next 5-10 years. From a technological advancement perspective, they're aligning with the metaverse. I think 20 years from now, a lot of us are going to live in the metaverse. We're going to interact in the metaverse. We're going to literally, I don't know if any of you guys have ever seen like the EXP Realty. Those guys have like an online platform where you walk around, you go to like their university, and it's all like a virtual campus and stuff. That's the future. Like as a gamer, I saw that 15 years ago, and I was excited for like the Ready Player One type environment. That's coming. So investing in companies like that is just generally smart. Real estate, people still need a place to live, right? People still want to unplug from reality, or they want to augment reality with the virtual, especially for the next 20, 30, 40 years. So real estate's going to do very well, especially residential real estate. I'm not bullish on commercial real estate from this. Like I like commercial residential real estate, but I don't like commercial real estate in the sense that I mean like targeting businesses, targeting, like commercial type tenants. The only commercial real estate that I really like, or sort of industrial type zoned land, would be like storage units. That's always been something that I've been, acutely interested in. The right deal with the right cap rate hasn't fallen in my lap with the right value add, but definitely that's a play where I think that people might consider downsizing to like a 1 or 2 or 3 bedroom apartment and live in the virtual world and then store some of their stuff inside of a storage unit. And storage units, you can raise rent like 50%, and no one's gonna go like through all the effort to move this stuff out of their storage locker that they spent forever organizing. So they're not as price sensitive. It's a great business, I think. And you don't have to worry about kicking someone out of the street if they don't pay. Like you get to take all the stuff in the unit. You have like leverage. Whereas if a tenant like leaves their crap behind, usually it's garbage, right? So it's, yeah. Let's do some Q&A. I'm gonna get some more of these questions out of the way, and then we'll go back to me just ranting. What's up? Good to see you. Thank you for the comments. Hey Mike, what are some of the ways to mitigate reduced taxes when selling a rental? Oh, geez, talk to your accountant. They'll know your situation best and give you some of the best advice. But as a general rule of thumb, don't forget any deductions. If you put in a capital expenditure 3 years ago, I know lots of people I used to talk to who are like, "Oh yeah, I put a furnace in and a roof in like 4 years ago. I forgot to record that as like a capital expenditure. I didn't file that in like 2018. Oh, I should probably like account for that." Yeah, you should. If you didn't expense it and you had a $10,000 renovation 4 years ago, add that to your cost base. Make sure you're accounting for all of that in your cost base. So when you're calculating your capital gain on sale, you're not paying tax that you otherwise wouldn't have had to. There's lots of receipts that just get missed. So don't miss those things. Expense everything. You can expense anything you did on the property. And then from a year-to-year basis against operating income, if you had to travel to the property, keep a mile log of when you drove where and when. You can write your gas and some of your car expenses off. You can, if you had to fly to check on your property that was in Florida, you can expense a lot of that travel to check on the property. That's part of the business. So there's a lot of write-offs people don't even know that they have that they can use to bring down their tax bill. So talk to your accountant and figure all that stuff out. But those are great ways to do it. For one, when you sell a property, it's a capital gain. If you've had the property for minimum 12 months. Like if it's a buy and hold rental that you're renting out and you're holding it for like 2, 3, 4, 5 years, you're like, how do I reduce taxes? Well, one, it's a capital gain in nature. So currently, this is changing in Canada, by the way. Another reason why I want to sell now is that currently 50% of all capital gains in Canada are tax-free. So half of the capital gain right away is tax-free. The other half gets taxed at your marginal tax rate. So if in theory you had a property you're going to sell in, say, October, you could, instead of closing in November, December, say to the seller, hey, I'll give you January 2nd closing, and you can delay it to a new tax year, assuming your year end is December 31st. For personal, it would be. If you ran a business, you got to decide when your year end is and figure it out. But oftentimes, you can buy yourself a year of deferred taxes, and sometimes even more than a year. If you sold it January 2nd, you don't pay tax until the following April 30th. So that's almost a year and a half of deferred tax. I just sold 11 properties off in January this year. Why did I do that? Because it's not due until April 30th the following year. I now have a year and 4 months to play with $1 million in tax that I owe. That's great. I can use that to grow it. I could lend it out in private mortgages, make 200 grand on the government's money. And then when it comes time to pay them, I don't have to pay them as much. And with inflation being as high as it is, me paying them $1 million a year and a half from now is like me paying them 800,000. So you can reduce your tax bill by deferring said gains. You could also lock in and realize gains in other areas of your life. So you might have a stock portfolio that, if you're investing like I am in the NASDAQ right now, or the S&P 500, or in crypto in the last 6 months, you're probably down right now. Probably down between 5 and 20% if you've been holding a balanced portfolio of companies. Year to date, the NASDAQ's down like 14%, I think. The S&P 500 is down like almost 9, 10%, something like that. That's just since January 1st. So if you deployed a whole bunch of capital in the market in January 1st and rode it till now, and you were just in the market for a ride, on average, in general, most people are losing money right now on the year to date. We technically were in a recession at the start of March, based just on the NASDAQ 2000, on the tech companies and the growth companies. Companies like Facebook, PayPal were down 50%. That's recession territory. So some might argue we actually have dipped into a recession. We're not really there yet. Like, by all definitions of said recession, economic outlook, job employment numbers are actually pretty good coming out of this, pandemic we went through. So I don't know. We're not there yet, but when the yield curve inverts within 24 months, when oil spikes 50% within 24 months, it's coming. Like, statistically speaking, it's a 99.99% probability we will have a recession in the next 24 months. But anyway, I'm digressing. If you have losses right now, sell, close out those positions, wait 30 days and re-enter those positions again. You have to wait a certain amount of time. I think it's 30 days, or enter something different, slightly different. So if you're in Facebook, you could sell that, maybe buy into PayPal. And when you sell, if you don't get back into that stock right away, you can realize those capital losses. And those capital losses can offset those capital gains in your properties. I just did that. I sold all of my loser stocks, waited, and then got into different positions. And I locked in at the low point $800,000 for taxes. That's exactly what you want. Like 800 grand is now I can use to offset $1 million in gains I've had elsewhere. So I've now reduced my tax bill. And for sure, those stocks will all come back in 2, 3 years, whatever, maybe a year from now, maybe 6 months from now. And when they come back, I don't have to realize those gains. So now I created a loss, and now I've got an unrealized gain over here, and I use the other loss to cover against the real estate stuff, right? So there's definitely things you can do from tax perspective to reduce. Sorry, I have a contractor who's decided to show up and do some renovations right now in the middle of my stream. So apologies for that, guys. Contractor life in the house. Who is your real estate property? So Joe, again, most of my portfolio was sold, but I still do have $7 or $8 million in real estate in Canada right now. We just bought a property in Florida, wholesale off market. It's about 55 minutes from Daytona Beach, about an hour from Orlando. And we picked it up super cheap. I'm really excited about it. It's on 2 acres of land. It's got a little guest house, a pool, the main house. It needs a little bit of work, but 2 acres of land and the structures that are on it, and a 2-car oversized garage and an RV spot. We picked that up really cheap, like well under 150,000 USD. So I was excited to make that purchase. So that's exciting. We're really excited for that. And yeah, I think there's a couple of strategic partners that I want to work with as we look through the the depression lens, as we see interest rates affecting the market negatively. I think there'll be opportunities like this that pop up that I will continue to acquire. If I see a property that I say, hey, this is 70 cents on the dollar, that's 30% upside. Even if the market tanks 20%, you're still above water, right? So and where there's a lot of cash flow involved, where you can hold it for a long time if you need to. If you like in the long term, you always win on real estate, right? In a 10-year period, a 20-year period, you win. So worst case scenario, you put a mortgage on it and you cash flow it. You pull most of your money out with a mortgage and you ride it and you enjoy the cash flow. So I'm, again, still bullish on that, but would I want to have all of my money into real estate right now? No, I like to spread it out a little bit specifically into businesses, into crypto, into a little bit into crypto. Crypto is very volatile, but you can definitely make some great returns, I think, if you are careful and diversified. The stock market, of course. There are many different asset classes you want to put your money into, but yeah. Tristan says, would you ever be open to sharing which stocks you have in your dividend portfolio? Sorry for the multiple Qs. No problem. That's literally what this is multiple question time. Ask as many as you'd like. Yeah, I could literally read you. I'd be happy to literally read you every position in my portfolio right now, but some names that come to mind are like, I have several REITs, Chartwell, like the nursing home stuff, some commercial stuff. 99% of the rents are paid. We've got, like your Suncors, your Enbridge, your Pembina, your Fortress. We've got your Bank of Nova Scotia, Bank of Montreal. We've got your Scotiabank. We've got like all financial utilities. I do have some tech. I have some shares in Apple and a little bit of Tesla, PayPal, Facebook, a little bit of Barrick Gold. I'm still bullish on silver. Silver's the poor man's gold, but again, it's a great inflation hedge. It does very well, generally in unstable times. So again, gold and silver and commodities. I think it's time to sell commodities. I'm rotating out of my oil and gas stuff. A lot of it's at 50%, like my Suncor and my, I have some ExxonMobil and stuff like that. I'm going to rotate out of those stocks just because, again, they've come up so much. I'm going to harvest some profits there and rebalance. Whereas tech and growth has been hammered, right? You've got some great names that I think will be amazing in 5-10 years that are trading at 40 cents on what they were a year ago, 40 cents on the dollar. So there's opportunity there if you can hold for the long term. Yeah. I'd have to literally pull up the list to see all the stocks that I'm holding, but yeah, a number of them. Next question. Good evening, Will. Good to see you on. Thoughts on selling rental properties now compared to waiting till this year of a crash dies down? Seems like buyers are holding off more and waiting for a correction. Yeah, it's not a great time to sell, but for me, it's about dissolving my assets in Canada and in the next 24 months working towards selling off my businesses that I have here as well, and working towards getting out of Canada. I will still have a corp in Canada, so I can technically own some stuff in the corp, but it's cleaner for my tax exit, like when I file an exit return, to have everything kind of wiped clean and make a clean exit. Probably make a clean exit to the US and then I'll probably make an exit from the US to the Bahamas. So I'm twice removed from Canada, and I'll still spend time in Canada. I love, my Canadian summers. It's beautiful. Visiting family and traveling around. It's, my favorite place to vacation, I think, especially in the summer months. Next question. Good job. 2.75 is great. I think, Tristan, honestly, billion dividend portfolio right now is not as attractive as it was a couple of months ago. You definitely want to throw in some. No, I wouldn't. I wouldn't actually throw in any fixed income quite yet. I think I'd stay away from fixed income entirely with the way that interest rates are continuing to rise. A lot of it is priced in, but at the same time, yeah, I don't know. The one argument I could see for billion dividend portfolio is that with the dividend portfolio at Interactive Brokers, you can borrow at like 2% interest against that portfolio and go 3.34 times to 1. Or in theory, you could save $1 million in a dividend portfolio. Sorry, the contractor is literally drilling right beside this vent here, so it's going to come into this room. It just is what it is. But hopefully it's muffled enough you guys can't hear it as well as I can. But yeah, we're renovating my living room right now. Anyway, such is life when you're trying to get your house just the way you want it. I lost my train of thought. Oh, dividend portfolio. So if you have $1 million in dividend portfolio, the nice thing about building a dividend portfolio is that it's relatively stable. You can use options to protect your downside on the dividend portfolio and cap the upside on the appreciation side, which is okay. Potentially the market stays trading sideways or trades down, in which case if you sold calls close to the money on most of your dividend portfolio, you could have a good downside protection for free. And as the theta decay happens on those call options, you would get paid potentially like 0.5% to 1% a month just for insuring your portfolio. The only thing is if the market does shoot upwards, then you'd be kind of screwed. But I think dividends are kind of overpriced right now. A lot of the telcos, like the TELUS and Bell that I hold in my portfolio, specifically the commodities and the oil and gas stuff is really overpriced right now and has done tremendously well over the last year. But as interest rates rise, are people going to be attracted by other opportunities as opposed to 5% yield from bank stocks? Now, bank stocks specifically actually might be a good play when I think that through, because again, bank stocks do really well in rising interest rate environments. They can pass a lot of that on to their customers, right? So they're very inflation hedged. They don't pay much to all the deposits they have borrowed that are still paying diddly squat, but now they can raise all their variable rate mortgage income, and then the spread too, as the rate goes from say 1.5% to 4% on a mortgage, they can bake in a little bit more spread for themselves. It doesn't kill the customer quite as badly. So there just is more margin in general, less deal flow, but because interest rates are higher, people are borrowing less in general. That's economically speaking, when rates go up, people should invest less in businesses and in real estate, and they should borrow less, but deals still happen. People are still bullish. There's still a ton of cash out there. Remember, in the last, the last 24 months, let's call it, most people in the real estate market have become multimillionaires. Like almost everyone I know who has a few rental properties is a multimillionaire. Like $2 million is nothing anymore. Like everyone in Toronto, Vancouver, New York, LA, all the major metropolitans, if you've had a couple of properties over the last 5 years, you're rich. So there's just so much money out there. And so that when people talk to me about like, Mike, it's so hard to raise capital to do deals. Like, how do you raise money to buy a business? Or how do you raise money from people to buy properties? It's like, one, there's a bazillion accredited investors. They're everywhere, and they all have a ton of money, and they don't know what to do with it. Myself included. Like, I also have trouble figuring out where to put my capital in the most efficient manner. And oftentimes, it makes more sense from a lifestyle perspective, from a time investment perspective, and from, just in general, from an investment theory perspective, to partner with an expert who's just better than you at that area. Like, if I was gonna, I don't know, invest in like, the gym space. I'm just thinking of like Alex Ramosi. If I was going to invest in the gym space and like, some company was growing that space, I would invest with Alex. I'd be like, yo, here, you take my money and let's partner out 50-50. And like, you know how to deploy this a lot better than I do. And so it would actually make more sense for me to give him 50% of all of our returns and have him run point on buying company. I'm just making an example. I'm not saying I'm partnering with him, but again, I love his YouTube content. So since I've discovered him and been turned on to his content, I've just had him top of mind. But as an example, like partnering with him and giving 50% of my profit to him, he gets to now buy deals with none of his own money. That's a win for him. He gets half the profit for nothing. But it's a win for me because he can deliver a better return than I can on my own. Like, and it also is a lot easier for me, and the chance of losing money is a lot lower investing with a pro, right? So, um, hey, right on. Accomplished theory. How you done? I did my taxes this year myself. It was easy. My accountant was an asshole. Charged $600. I didn't realize it would be all of my. Yeah. So Simple Tax is the software that I've been using for the last 7 years. Now, I don't file my own tax returns, but I play in there and I look and I forecast and I plan out what my tax returns will look like. My accountants take forever. Like I used MMP, and they take forever to get the returns done. We filed late last year, but it is what it is. I'm at a point where I need a big five accounting firm to stamp my return. I just feel more comfortable with that. I want to make sure that everything's done, properly. And just, they can provide some advice and some guidance that, I'm not an expert in tax, so I don't do it. But I play around in Simple Tax. Simple Tax got bought out by Wealth Simple, so now it's Wealth Simple Tax. Amazing platform for your personal returns. You hit import, it imports all your stuff. Just double check they didn't miss anything. If you had a simple return, I don't have a simple return. I can't even file mine digitally because I have too many T776 statements. I have to physically mail in my tax returns. I have too much going on to file. They don't let me do net file. I'm a more complicated return, but for the average person, it's an amazing platform. By the way, there's 60 people watching this stream live right now. Smash that thumbs up button if you're getting some value here, and I hope you're not suffering as badly as I am and everyone else who's going through tax season right now. So tax season sucks. Again, another reason why I want to move to the Bahamas as my primary residence, because there are no tax returns. Forget the fact that even if there was tax, and there is some, like there's VAT tax and there's which is basically a goods and service tax like HST kind of, and there are taxes like land transfer tax on real estate there, and so there are some taxes and imports and duties, but you don't file a return, and the time it takes for me to figure out make sure all the documents are there, like I have to audit my bank statements and make sure that bookkeepers didn't miss anything, and bookkeepers miss everything all the time. That always happens. I have to verify everything, make sure it's all good. That time, 63 people on the stream right now. Smash the like button. We got 24. I want to see us get 40 likes right now. 50 likes. Let's go. Hit the like button if you're getting some value here. And if you hit the like button and you throw in a question, I'll do my very best to answer it with, as best I can on the fly, brain dump style. But yeah, definitely Wealth Simple Tax is a fantastic platform just to play around in. I often will go. It's just, I think for your personal returns, I don't know if they have a corporate version that's free. The free version is for your personal. So you go, it's like literally you don't have to download anything. It's browser based. So you just log in, you can go around with it. I've had Legacy for years. So I go in every tax year and I play around with it. And I look at the different. Okay, I got a super chat. Hey, right on, $10. William says, Mike, I know you don't short, but could you call out one or two stocks that you would short in the market right now? What would I short right now? You know what I would short right now? I would do a defined short on the next big up day. I wait for a big up day, and I would short the VIX. I would sell bear call spreads on the VIX. I have been doing that. You can be short while having a defined loss. So as an example, you could do like a 24-25 bear call spread, where if it's below 24, you get the max profit. If it goes above 25, you stop loss out and you lose like a little bit. I think that the VIX is headed down. There's also been a decoupling with the VIX too. So yeah, the next big update on the VIX, I think you could close that trade out in the next 60 days and make big money. All we need is 2-3 updates in a row and the VIX will drop below 20. So I think that's a stable play the next time it's at around 25. So that will be one thing that I could play short on. I hate to be a contrarian here, but like Rivian or GameStop or AMC, GameStop more than AMC actually. I'm a little short on that. The fundamentals make almost no sense, right? I don't know. I don't really short a lot, so I haven't really looked at a lot of companies. But a good signal if you're going to short, like I use instead of using TA, which is technical analysis. I don't really believe in technical analysis. You can't use past chart performance to dictate what's going to happen in the future. It's bullshit. You could try to use market psychology. A lot of it's like market psychology, the psychology of investors thinking, and try to plan that out. I get it's one of the 6 ways to value stocks. It's a valid way. I get it. Like you can use technicals to plot trends, but trends break all the time and they're unreliable. And human psychology is unreliable. And there are too many variables to really accurately predict. But my favorite way is looking at the cash flow, looking at the income statement, look at the balance sheet. What's the price to earnings ratio? What does the assets on the book look like? What's the debt load look like? Look at the company. If they have a lot of debt right now, and all debt is rising in interest costs right now, right? So that companies that have a lot of debt and can't pass inflation costs on would be a great company to short. Companies that are trading at 400 times price to earnings ratio, that don't have a lot of earnings, that are speculative in nature, that have not great books, but are trading at crazy prices relative to what they're earning, that's a great company to short. So yeah, again, I like to go long. I don't like to be short. I've been burned going short. I was right, by the way, like Newegg, as an example, was trading at $29 a share, and I engaged in a naked short last July. I was doing amazing. Year to date, I was crushing the S&P 500. I had like hundreds of great trades, and I just put this one trade in. And then I was like, then the next day, it doubled to like 35. No, it went 20, 19, 29, 35. I doubled down twice. I was like, you know what? This makes no sense. This company should not go from $8 a share or $12 a share to $30 a share. And then at $45 a share, I was like, what the hell? Like for like 4 days in a row, just like mooned every day. I'm like, Newegg, they're a cool company that sells computers online. I like that they sell parts and components. And I get with the crypto mining space, there's going to be demand for that, and gamers love it, and et cetera, and so forth. They're an okay company, but they're producing nowhere near the cash flow to generate this valuation. You're holding for hundreds of years to get your money back just based on buying the actual company, because you're buying a company that produces income. The goal isn't to buy a stock and sell it to someone else for more so that they can be a bag holder. Like that's not real. You're buying a share in a company. As a shareholder, you own all of their debt. If their debts exceed their assets and they stop producing enough income and it's negative, you as a shareholder have to give them the capital to pay the debtors. They go bankrupt, your shares are worth nothing, right? If the debtors collect the assets, you get nothing. This idea of like people are just investing based on like trends, like they don't understand what a balance sheet is. They don't understand what an income statement is. They don't know how to look at a cash flow statement. They don't know anything about that. They don't even care about the business fundamentals. They're like, GameStop's going 400% up because 3 speculative reasons. And like it has nothing to do with them bringing on customers or acquisition costs to the customer or them actually making a profit at all. It's just like revenue's going to grow. And like, as long as revenue grows and like, you know, the valuation will increase to 500 times price to earnings ratio. And by the way, in a recession, that doesn't happen. Valuations go down, right? So if I was going to short something, it would be companies like that. Anyway, so as a value investor, someone who looks at the intrinsic value on companies, like I looked at Newegg and I was like, this makes no sense. Like I would own Newegg at $8 a share. I like the company. I just don't like them at $40 a share. And so I shorted them. And then they subsequently went to $70 a share and I got margin called and I closed. They forced all my positions closed. It then crashed from 70 down to 25. I got back in at 50 and was like, I still believe this company's garbage. It's going to $8 a share. And I wrote it back down. I made back half of the money, but because they forced me to close the positions, they froze my account. They said, hey, this is a high risk trade. We're going to force you to close it out. My margin requirements went out the window. And anyway, I was stupid. I didn't realize it would change so drastically like that. But again, I was shorting based on fundamentals. Don't do that. If you're going to short based on fundamentals, make sure you do a bear call spread so you can stop out if you're wrong and you keep the trade going. And then eventually you're right. If you're investing for fundamentals, you're eventually right? Like eventually, and it did. Newegg went down to $4 a share. It went from $70 a share to $4 a share. If I had been able to keep my trade on from July to now, I would have made $15 million. I was right in the end. I just didn't have the timing down. But again, I don't short for that reason. It's like, because I like to look at the fundamentals, I'll hold a company like Sam. Again, I like Sam. They've had a few bad quarters. Their earnings are doing terrible now. Their price to earnings is way out of whack because, again, they had a bunch of write-downs due to some supply chain issues and lack of demand on their seltzer brand. But again, they're bringing in weed drinks and a number of other things that will help them. They've been around for hundreds of years. People drink beer. It's a solid business. It's been around for hundreds of years. That stock was at $1,300 a share. Now in the 300s, I'm nibbling at 300s. I'm like, this is going to come back to $500. That's a company that I don't mind owning, for a longer period of time. Anyway, that's just my philosophy. What do I know? I'm a real estate guy. I'm a guy that buys businesses and adds value that way. I'm a deal hunter. In the stock market, I'm not in control, right? I'm along for the ride. I do it for diversity. I do it for fun. But again, I have no edge. 99.9% of crypto and stock traders do not outperform the market over a 25 to 30 year period. Now, if you use insurance and options to stay way out of the market, in theory, you could generate a very consistent, stable return of like 1% a month. And some years you will underperform the index, but over the long term, you have a stable cash flow. That's interesting, right? You can make it an active business. From a tax perspective in Canada, that's attractive. You're looking at 13% tax rate on the first $500,000 that you make in that corporation if you're options trading. So options trading can make sense from a tax perspective. It's fun. You can generate a consistent cash flow from it. But in general, most option traders, 999 out of 1,000, will not beat the index over 25 years. Yeah, there you go. So I got smoked on Sam too. I nibbled in at like 600 a share. They were at 1,300, and I nibbled in at 600, and I was like, this is a value, and it crashed like, I think it's almost 390 a share right now. So I'm down quite a bit. Thankfully, I didn't buy at the top. I bought after it crashed 50%, but and I'll hold. You know, like I continue to sell calls on it. I continue to run the wheel on it. So my cost base keeps going down on it. So eventually, even if it trades flat, after a year or two, I'll be at break even. So no matter what, I will get back to where I'm above water. It's just a matter of time. That's the beautiful thing about running the wheel and the option strategy with your equities. You do give up some potential upside, but if stocks trade sideways or down, you continue to drop your cost base. So I prefer it to just holding. I like to nibble in and have those calls running. I try to actively trade too much. I try to, the more when you get too much into the trading, is Sam up 17% after hours? Jeez. Nice. I'm no longer underwater on that stock now. If that's true, if they're up 20%, they must have had a great earnings. I haven't checked their earnings. Must have come out. Is it earnings time? Is it up? Oh, that's no good. $17. That's not enough. It's only a couple percent. Anyway, if it's 17%, that'd be sweet. I would make like 20 grand or something. My position, what do I have? I have 150,000 in that company. So what questions have I missed? Oh, there's another super chat here. Hey, sweet. Sorry, I missed it. Let's go down here and get it. So Joshua says, thoughts on acquiring or developing commercial residential right now in the U.S. The same question for affordable housing, multifamily in the U.S. So, I don't like development. I've done a subdivision development before. We have 36 likes. We have 56 people watching right now. Hit the like button. If you're watching this, hit the like button. I'd appreciate it. It tells the algorithm that the content is good enough for other people to watch too. So that'd be cool if you could just do that for me. But yeah, so my thoughts are, in general, there are opportunities to acquire land cheaper in the next year, I think. But if you already have the land, that's a different conversation to have. Inflation's at all-time highs. Supply chain issues and labor constraints have made it hard to build right now and expensive to build right now. But with things cooling off and interest rates rising, it will be cheaper to build, and there will be excess in the labor market soon. That's coming, especially in times of recession. That's the time to build. I would say wait. You could start exploring the options, but wait. Don't build yet if you're trying to time it perfectly. There are still supply chain issues. It's still expensive to build right now, but it will get cheaper. From a purely fundamental perspective, it depends on what you're building. You said residential, commercial. I think affordable housing will be in demand as people continue to immigrate to the U.S., as population continues to grow. We have supply issues, especially, and it depends on where you're investing, but let's say it's Florida. Florida has thousands of people moving there because they want the freedom from this, pandemic narrative of lockdowns and bullshit related to that, and the whole, I don't know what you'd call it, woke mindset, right? There's people just escaping that whole political sphere. And so I think there's a lot of people that are escaping to Florida. And so a place like that, where they have a lack of supply, you could help solve that issue. And if your market needs supply of affordable housing, you will be rewarded handsomely for building and for developing. So development could make sense. That said, developing is a long time horizon, right? You're typically years from when you first get the papers, together, to putting the shovel in the ground, to building, to being fully done, right? So it's a long time of no cash flow. So you need to have deep pockets. And though they might say in their first consultation meeting, the municipality might say it's 6 months to a year, expect it to be double that. In my experience doing a small subdivision development, I'm still dealing with issues with servicing and the road and stuff. 2.5 years later, 3 years later, I even sold the lots, and I'm still having to do work there and fight with them to release funds. So it's development is a long-term play. You can make money at it, but it's not a cash flow play. And in a down market, you can get slaughtered on a development play, and you'll see those types of development plays go belly up. Those are interesting. When someone goes belly up halfway through, that's what I'm interested in a development play. I'm like, I'm gonna come in when you've run out of money and you're halfway through and you've been fighting the city for 9 months and they're just the cusp of giving that last approval. That's when I want to come in, when you're out of money. And you can get negotiated a really good deal. But yeah, typically those are the projects that go belly up first. Again, affordable housing, really stable. If you're talking commercial, it's hard to find tenants right now. People need less office space. People are working from home now. There's not a need for, everyone's buying online, so you don't need retail space either. So there's just, I think there will be a lot of commercial units converted to residential in the coming years. And so demand for commercial will be less and less, harder and harder to rent. And the value in commercial is all in the commercial tenant. So if you're good at finding commercial tenants and you have them lined up, then invest in commercial real estate, but they're getting harder and harder to find. And vacancy rates are higher and higher. So I'm not bullish on that type of real estate. I like my residential, I like my Airbnb, I like my vacation rental, I like my, again, the bread and butter, people living in places like 1, 2, 3 bedrooms will always be in demand. Bow, 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 bow. By the way, I'm doing a shameless plug. I have a beautiful property. It's a sixplex in beautiful West London in Byron, right near where I live here. It's one of the nicest areas in London. Most of the houses here are $1 million to start. The average house is well over $1 million for a detached house around here. You're looking at duplexes that are 700,000, 800,000. I have a sixplex, a beautiful sixplex, but renovated to the nines, fully vacant, Airbnb. I will be renting them out for closing if it wants to. It can bring it almost on Airbnb 12, 13,000 a month, but as a rental, like 8, 9,000 a month. It also has a small crypto mining unit that's set up with 100 amps of power and a storage locker. So it's like a 7th quasi unit, great parking, amazing location. It's the only sixplex in Byron. Forgive my sales pitch. I own the property. I would continue to own the property. If someone were to pitch me to do financing for me, if you're going to get an A-lender mortgage, you want me to stay in as a JV partner, I'd be open to that. I don't want to invest any time in it. It takes time to go through the commercial appraisal process, to go through an anal, ravaging of your finances to get approval. I have to spend like 20, 30 hours to do that. My time is too valuable to go get the mortgage on a small building like that. That's the reason why on my journey to $1 billion, I'm only going to be taking on deals that are around $5 million, just not with my time to do small deals for the most part, excluding the odd 1 or 2 deals that pop up that are just that attractive. But anyway, that property is up for sale around 1.4 million. It's a 7 cap rate, which in London, like there are buildings for sale right now for 3 cap rate and 4 cap rate. Tremendous amount of value. I would be open to a second mortgage vendor take back on part of it if you want to qualify for the first. If you want me to stay on as a partner to help you get the equity you need, I'm open to those options to sell it. It's a property that I don't mind holding. I love it. It's in a beautiful location. I'm looking to exit though in the next 24 months. So know if we're going to partner, then eventually you're going to have to buy me out because I'm leaving Canada and I don't want any assets in my personal name in Canada. And I plan to sell that corp, which owns that property. I suppose I could make a new corp and transfer it and keep the property. But my partner who's on that property is looking to cash out and put that capital to better use elsewhere. So I'm definitely open to options, but again, cashing out makes a lot of sense. So that's a property I have up. And for those who are just looking for a starter property, I have a property for around $525,000 in West-ish London. So a decent area on a pretty quiet, nice residential street. It's got a huge lot. It's like almost 200 feet deep with a lookout basement and direct walkout access for the lower unit. And the upper unit's a 3-bedroom. It's really a 2+1, and the lower is like a 2-bedroom. It's really a 1+1. But yeah, you could rent that out and it would cash flow positive. Both those deals would cash flow positive. Again, I think real estate is probably a bit bearish right now, so I'm thinking that you're not going to make a ton of appreciation. I'm being transparent. Like I don't believe there are people who believe the market's going to rebound. I don't know. I know now's a good time to negotiate. Like normally these deals would fly off the shelf. They're not. So hit me up if you want to negotiate a deal. There's something there. These are decent properties, both of them. I have a few other properties that'll be hitting the market soon. I have a triplex downtown, which I will probably sell next year for tax reasons. I can't sell it this year. And I have another beautiful property, the tiny house, a guest house in the back in near Fanshawe College, in the 700 range. It's like, anyway. Yeah, I have a couple other properties that'll be coming up too, so keep your eye out. There'll be another triplex in West. And eventually, I'll probably have to sell this beast that I live in here, my primary residence, which is sad. I don't want to have to sell it, but it's part of the exit return. and leaving Canada. So anyway, next questions. Yeah, so I guess to sum up the super chat, again, thank you for the super chat. I think that, yeah, there's definitely opportunity to buy right now, but be careful on what you're buying. Don't go buy something that doesn't cash flow. Buy stuff that has solid cash flow. If you can get a vendor take back deal, if you can negotiate a bit on the price, now's the time to do it. We're seeing opportunity. It might bounce back. You know, we might see that the government doesn't tighten up quite as much as we think when it relates to, rising interest rates. We might not see that they get to 6-7% like some people have priced into the market right now. Maybe they stop at 3.5-4% here in Canada. And if that's the case, once we actually know how much more interest rates are going to rise, people will be bullish again, right? And when that turns, that's the time to, you won't get as many good deals. It's not going to be as attractive as it is right now, where you can negotiate some pretty good deals right now. Yeah. I might get a property for $520,000, mortgage and appraisal 1.3. Should sell and get into private lending. Much better cash flow, stress free being a landlord. So that's one thing that That's one thing that I thought about too. Is like looking at that sixplex as an example. I haven't refinanced it right now, so I have $750,000 in equity in that one property as an example, right? Something like that between the partner and I. Maybe not that. Yeah, about that much in equity, and like we could put that to work at, another deal where I can make, like a flip or something, or in private lending, or in other avenues in businesses, even in crypto mining, right? As an example, you can make amazing returns there. Get like a 50% return on your capital, with like a Bitcoin mining farm as an example. The amazing return, right? Like I can put that capital to better work. So that's something I've always thought about too with properties that have a lot of equity. You need to refinance your properties. It's just the problem with refinancing is it's so much work. Especially because once I sell off my properties is not so bad, but I'm getting close to not being an anal raping anymore. But it used to be the point where like you had to send the proof of rent deposits for the last 90 days from all of your properties. Tenants had to sign new agreements. So that if they're off lease, they're on month to month. You have to get them to sign a tenant acknowledgement, saying they're still a tenant, saying what they pay, and to submit that to the bank. And then you have to get like the leases and send them the old leases that they had, and the rent deposits, and then property taxes, and then utilities, and then they want to audit your 2 years of tax returns, and and they're gonna have a million questions about everything. If you sold 20 properties, they want the legal documents for every single property you sold, how much you made on it, did you pay your taxes on it? Honestly, I've sent lender packages of like 300-400 pages. The lender, when they were done with me, was like, Jesus, your file took me like 40 hours just to get together. I'm like, yeah, I know. It's literally not worth my time to apply for loans. If you only have like 2 or 3 mortgages, it's easy. Like it's a breeze. You set a couple of leases and you're done. Your taxes, your pay stubs, and your job letter, and you're done. It's not that bad. But for me, it's pretty invasive. I've done a lot, and I continue to do a lot. And so the lender process is like an audit almost. So yeah, I should do that on these properties that have lots of equity in them, like that one 337 Bowler, the sixplex that I have in Byron here. It's a great one where I have lots of equity in it. And I even still have a flipper's first mortgage on it at like 10% interest or whatever it is. So not smart. I should refinance that out. But again, I'm just sitting on it here. I'm like, I'm going to sell it. So like, why would I go through the effort? Or I tell myself that so I don't have to go through the effort. Someone should come in and take that property off my hands and restabilize it. This is an example of like, this property could be running on Airbnb right now. And like, it's just sitting. I'm like sort of trying to sell it. Not very hard. We're not marketing it really at all. This is my only ploy to market it at like the 63-minute mark in a live stream that no one's watching. And like the odd Instagram story post. But, and there's probably someone watching this who wants to acquire an asset like that. When I bought it, it was like a Pokemon card to me, or like an old collector hockey card. I'm like, I'm going to keep this property forever. Again, that was the thought when, I was going to be staying in Canada forever, which I won't be. I'll be leaving Canada. Not in the summers. I love Canada in the summer. It's beautiful, but I can't live here. I can't be a tax resident here. I can't be under Trudeau and the socialist rule as they continue to phase in new capital gains taxes. If you make less than 200 grand a year, Canada's an amazing place to be. I'll just state that fact. You make 100 grand a year here, or 50 grand a year here, you got $1 million in capital invested in dividend stocks. Canada's amazing. Like a couple can bring in $120,000 a year tax-free using Canadian eligible dividends and tax-free savings accounts and pay no tax on that. $10,000 a month, no tax. It's a great place to retire if you want to live on less. I'm on the journey to $1 billion. So I'm like, geez, on the journey to $1 billion, I ran the numbers out, like the next 10 years, I might have to pay like $300 million in taxes over the next 10 years if I succeed like I think I will. And that 300 million is a lot better in my pocket, reinvested in my business, than it is in Trudeau's pocket, squandered and wasted to bureau, I don't, what do you call it? Bureaucratic waste. They just get nothing done. Like $2 million to talk about building a park bench, and then like to actually get it built, it's like $3 million. Whereas like I can just go buy a park bench for $5,000 and pour a slab and screw it in privately for like $5,000. They get things done for 10 times the cost, and they want to spread it around. And I get it, but like, I don't want to pay for it. I paid enough. I paid enough. I'm done. Okay, next question. Da, 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 da. I don't even know where I was. I lost my spot. Steven, I hate you. I thought it was 17%. I'm waiting for that day. Carla says, I caught myself advising a client to move to the Bahamas because you said so. Carla, I like that. I like when, and I get this all the time. I was at the gym the other day. I was at the Gaylord in Orlando. It's a beautiful resort with a nice hotel. It's beautiful. Like hold alligators and stuff. And they got a big water park. And I ran to someone and he's like, hey, I'm from Florida or whatever. And my wife's from Canada or something. And we got just chatting. He's like, you're Mike Rosehart. That's like, people stop me like, hey, you're Mike Rosehart at a random resort in the US. Happens all the time. At the gym the other day, a guy stopped me up. He's like, are you Mike Rosehart? I'm like, yeah, it's me. He's like, oh, that's so cool, man. Like, and I love when that happens. So by the way, if you ever see me in public, like I'm walking around Disney or I'm wherever, I'm at the gym, come talk to me. I don't mind. Just say hi. Makes my day. It's cool when I can have an influence and an impact. Joe, I made a whole stream and whole episode. You go check it out. It's an hour long in the Bahamas. I made a live stream. It's got like 7,000 views right now. It's actually doing pretty well. It made its rounds on the island because I got dozens of messages from people on the island that are like, hey, I want to partner up. Hey, Mike, I know about deals. Hey, I can hook you up with lenders. Just like so many connections just from that video. So I was glad that I made it. But yeah, like from what I can understand and from people I've talked to, it seems like 90 days a year is required for tax residency, $750,000 USD minimum to get residency there. You can bring your kids and your family under that residency permit. Now, you're not going there to work because you're going to be retired or whatever, but you can invest in real estate and things like that. I think the best play, the reason why the Bahamas is the best, is because you don't file a tax return. Like, not only is there no capital gains tax, no income tax, no crypto tax, speculators tax, nada. You just don't even file a return. That's amazing. Like, no one's tracking you. No one's doing, you do what you want. It's cool. For one, I like that. Two, if you invest in the US, you have to do it. I'm going to do it inside of a corp. I'm going to pay tax still. If I sell a property or whatever, it's going to happen. But every trip, like the Bahamas to Miami is 60 miles. I can boat that real fast, speedboat. There's a ferry that goes back and forth several times a week. You can get on. It's like $30. There's flights. The island that we chose has direct flights, international airport. Direct flights, 25 minutes. I commute longer driving from work in the same city to home, or going to get a sub at Subway if I'm hungry for like sushi, go to downtown to get sushi and drive back. I commute further to go get sushi than to go from Bahamas to Florida. It's that close. It's a suburb of Miami, but you get to live in a tax-free zone in paradise, some of the most beautiful waters. I enjoyed my trip there thoroughly. But for a number of reasons, one being like the Cayman Islands, you got to live there 6 months a year. Puerto Rico, you want to make Puerto Rico your primary residence, you got to be there 6 months a year. There's a reason that Sam Bankman-Fried, the richest, youngest guy in the world, he's 29 or 30, he's got like 25 or $30 billion, and he made his money in crypto with the FTX exchange. But he moved to the Bahamas as well. Not the same island that I'm choosing, but he moved there too for a reason. You can travel. You can be out of the country 275 days a year and still have residency there. You only need 90 days a year, and you have to invest minimum amount to get the residency, but that's nothing. But yeah, like you could literally spend, like, if you cut all your ties to Canada, you could vacation in Canada 5.5 months a year, pay no tax. You lose your health benefits, but like the Bahamas is the third wealthiest country in North America. Fact. They're extremely wealthy. They're a great offshore bank. Like their second largest industry is offshore banking and finance. Like that's what they do. Scotiabank's there, CIBC's there, RBC's there. They've got private banking there. Anyway, I think there's so much opportunity there to bring a little Canada experience onto one of the islands. I'm planning to do a development or something there. So stay tuned. We'll all get properties there and we'll have a good time. It's just a great place to vacation too. Relatively cheap. Like you could buy We looked at a 1,700 square foot, 3-bed, 2-bath bungalow, one of the islands we looked at, for $90,000 US. We looked at a mansion, like a mansion estate on the water for like 500,000 USD. In Canada, you'd be paying 3-4 million. For the bungalow, you'd be looking at like 800,000. So it's like 700% more expensive to own real estate in Canada. Oh, biggest thing is no property tax. Nothing, zero. Here in Canada, I pay like $9,000 a year in property tax just for my house where I live. Here, like that's just one property of many. And property taxes are going way up soon. That's coming. Just wait. The tax levied in Canada is going to be going way up in the next 5 years. With the new majority government, the NDP and Liberals are going to shove down with their new coalition majority government a ton of new tax legislation that will take probably a decade to reverse. Maybe it'll never reverse at all. Because again, the 51% are sitting at home doing nothing. And they're not working. There's a great resignation. No one wants to work. So UBI, Universal Basic Income's coming. Someone has to pay for that. And I just don't want to pay for it. You know, it's cool. Like I support the people in their communist movement and like, no one needs to work. Let robots do all the work. I get it. I hear the arguments. My brother's a full-on communist, so I understand. I had deep philosophical arguments about it, and I understand how I'm being selfish, but like, I just want more for myself. I want to achieve more and be better. I don't want to just do nothing. It's just not me. You know, I don't want to sit around. I want to build things, and when I build things, the game is to have more. If I work harder and I achieve more, I should get more, and I should be able to have cool new experiences. And so I like the grind, and I like that the grind unlocks new levels. So I don't want to play in a world where there's just one level. Like that's fucking boring. I'm turn that game right off and go into Ready Player One if that's the world I gotta live in. So as Nomad Capitalist says, go where you're treated best. And I think that the proximity to the developed world, to like Florida, I can go get like world-class sushi in Miami. I can get like, you know, I can have those first world experiences. I'm 30 minutes away. You could, in theory, this is just in theory, you could spend 4 days a week in Florida, spend the weekends or 3 days a week in the Bahamas, and then spend 5 months, and do that for like 9 months a year, where you basically live in Florida. No, you live in Bahamas, but you spend a lot of time in Florida, and you go back and forth. You commute every week, or you could 2 weeks one place, 2 weeks at the other, and go back and forth. Have houses in both places. Maybe you just vacation to the Bahamas, and your primary residence is the Bahamas, and again, visiting Canada, and pay no tax. Like you could spend 9 months, 275 days a year in a first world nation, like the US or Canada. And yeah, I mean, Tristan, that's bad. That's bad. 6-10% yield in Scotiabank. Yeah, I believe that's accurate. Yeah. For them to keep your deposits in USD, they'll pay you 6-10% yield. But honestly, treasury bills are paying something like that pretty soon anyway, so just stay tuned. But yeah, the lending there is like prime plus 2, I think. So it's like 5-6% for a mortgage there, 70% loan to value. It's not as good as the developed world, but again, in the US right now, mortgages are 5%. So yeah. No, I haven't invested in Nevada Gold Royal Company. Trading at a high PE, but just had record earnings. Yeah, Zach, I don't follow the company. I can't advise on it one way or the other because I haven't been following. But I think just in general, gold and silver stocks have been doing fairly well. Over the last 10 years, they've done very poorly. So it's gold and silver's time to shine, I think. Especially in the next 5 years, I think they'll be a really good... I'm bullish on gold and silver in general. So I don't know how good of a mining company they are, but yeah. Bum, bum, bum. If you plan to acquire 10 plus properties, you put in brackets duplex, in the next 3 years in Alberta, would you recommend doing this in me and my wife's personal names or under a corporation? So it depends. There's no straight up one answer is better than the other. But in your personal name, there's the opportunity to create losses in the first couple of years of operating when you're first renovating the property and stabilizing it. And so it's possible in theory that you could offset your day job income entirely using rental properties. I know people that bought 5 and 10 properties that got their $100,000 a year job income down to zero. So they were getting money back, paying zero tax. And basically they're running those rental properties at losses while building a huge amount of capital gains, which are a preferred way to earn income anyway, because half of it's tax-free when you go to sell. The other half you have to pay tax on. But capital gains are a preferred way to earn income. In your personal name, there are some huge strategic tax advantages. On top of that, insurance is cheaper and financing is way easier and cheaper. I would do 5 properties in your name, 5 properties in your wife's name. It'd be a cakewalk to get financing. Much easier than in a corp. Actually, you know what I would do? I'd open a corp and I'd buy a couple in the corp, and I'd buy a couple more in the corp in the wife's name, and then I'd buy 5 in each of your personal names, because they don't see what's inside your corp when you go to apply for your first personal mortgage. So maybe do 5 in the corp, 5 in her corp, and then do 5 each in your personal. You can do 10 with Scotiabank, so 10 in your personal names. So you'd have 20, 30 properties, all with residential mortgage rates. The reason that's an advantage is residential mortgage rates are 279 to 329 right now, and commercial rates are about 4% and plus. So there's advantages to a residential mortgage. Your overall interest cost is 20 to 25% lower, which is potentially 10 to 15% more cash flow on your bottom line, which could be over the long term 10, 20, 30, 50, 100 grand difference. So it is impactful, I think, to do it with residential mortgages. But at a certain point, you max out, and for scale purposes, it's still cheaper to get debt than it is to bring on equity partners. So, yeah, great question. You do you. Alberta is obviously on the rise right now. It's a hot market. You're buying in at a hot market, which sucks. But oil prices may stay high and commodity prices stay high, which would mean good things for Alberta. So it could do very well for the next 5 to 10 years. It depends. I think Trudeau doesn't like, and the NDP specifically don't like oil. They don't like, they're all about the environment, right? So they would shut down those economies. I think from an environmental perspective, they would force legislation that's not conducive. That said, there's just a need right now, like a big need to produce. And if Canada doesn't produce it, someone else will. And when they produce it, they'll produce it in a worse way, which is net worse for the planet. So it's better that we produce it here cleaner, more efficiently, is my opinion. So anyway, I'm still pro electric car. I'm still pro, I like the EV movement. The thing is, people pretend this EV movement's super clean. Do you know what it takes, like the lithium and shit that's in these batteries? And when they die in 5 years or 10 years, they're no good. Where they go? Are these solar panels, after 15 years, they're no good? You know how much oil it takes to transport and to build all of these solar systems? It's not necessarily great for the environment. I'm just throwing it out there. Like, people think it's like super clean. It's not that clean. It's cleaner, but it's not that clean. There's still a ton of environmental destruction associated with us being humans living in first world nations, whether we generate our power through solar or through, although water power is like hydroelectric, the best, huge fan of that. So we need more of that. What about acquiring multifamily already built and then some sort of value add? Josh, that's my bread and butter. I do that all day. I will continue to do that. I am looking to do more of that as the market cools down. We're like 6 months to a year before I think we'll see a little bit of a cool down in places like Florida, specifically. Here in Ontario, we're actually seeing the cool down right now. That's real. It's happening. Tyler says, Mike, I want to buy my second rental. I can only afford 450 tops as I need to do 20% down, renovations, other costs as it sits with my savings. Should I wait or go long distance? It depends. I mean, do you want to be traveling? Your first property? Do you want to be doing the work yourself? Do you want to be outsourcing it to a management company? There's so many factors involved. Maybe there's a way that you could get a gifting letter from a family member or a friend, or someone could loan you and do a gifting letter, in which case they would let you borrow more. So if you had like 100 grand, you could buy a $500,000 property. If your uncle could lend you 50, or your parents could write you a gifting letter for 50, and you got the 50 from somewhere and it got into your account, and you could just write a gifting letter to explain it, how it got there. Then your 150 could buy you $700,000 property, right? So in theory, you could borrow the down payment that you're short. There is always the option of private mortgage insurance, and then you would pay like 3 to 4% of the down payment in fees up front, compounded against you, but you can get into a 5% down or a 10% down deal. So you only need 5% down in theory to do that. It's going to be a little bit more expensive with the private mortgage insurance, but it is an option if you have no other options. The 20% down, obviously not having to pay that private mortgage insurance, so it's net win. But either way, getting into a deal could make sense, especially if you're going to house hack it. If it's just going to be a rental property, I would say wait. I think the market's going to continue to soften a little bit more. You might be able to negotiate some a little bit better deals, and you'll be continuing to save. And I think the right opportunity will fall in your lap. Thank you, Rusco. How long am I going to let it go? It's a good question. I could actually put in a full pony. It's you can see it, but like I'm like 9 inches, 8 inches. Like my hair, I have curly hair, right? So when I pull it straight, like I'm like, I don't know, 7, 8 inches. It's actually quite long, but I have really curly hair, so you can't really tell. I've been enjoying it. I I'm not going bald per se, but like I've noticed my hair thinning a tiny bit, like not a lot. I'm obviously not going to go bald like in my 30s. It'll probably be like when I'm 70 or something. Although like rich people don't need to go bald, as Elon Musk has proved. His hairline grew mad respect and grew back in. So there's always the way to get your hair to come back through transplant. But there is actually a drug that they sell called shoot, I remember what it's called. They sell knockoff brand like Keeps and stuff that you can take that actually prevents you from going bald. You take like a small tablet every day and you don't go bald. Like most types of baldness are curable now. They actually have a drug that's been out for 25 years. They've been testing that actually works. So in theory, people could just not go bald. Thank you, Propecia. I've looked into that. I should start taking that stuff maybe. I've heard some good stuff about it. Then I would never go bald. But I just thought like, hey, maybe